How's it going? Welcome back. It's Jonathan, and as you can see, I've opened up the chart directly onto the Bitcoin price, and we've taken it all the way back to 2013 because there are a few topics that I wanted to talk about today. Now, just remember, if you get any value out of this, if you've learned something new, if you want to keep in touch with what we're doing here, go ahead and hit the like, hit the subscribe, hit that notification bell, and you can also leave a comment with what you want to see in the future. With that though, I just wanted to direct this video in the direction of 3 to 4 core topics. No doubt I'll be waffling as I usually do, but I want to be looking at cycle trading. We're going to be looking at counting bars. There's a specific low that I'm watching at the moment in the market, and this is a low that I want to make sure that we have our exit strategies in place, so to speak, should the market fall below the specific low. And then on top of that, I want to talk about a possibility of an extended cycle and all these thoughts on extended cycles. Now let me waffle just for a few minutes, because I came out several months ago, started showing you about Bitcoin cycles and how to use cycles in your trading. And I've shown with I like to say a very good accuracy or strike rate of success on how these cycles work and how you can use cycles in your investing. Talk about time cycles, talk about price cycles, and talk about areas in price and time where markets can change direction. I see a lot of new guys coming out these days, and I wouldn't say new in the sense of, they've been on YouTube for several years, etc., 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 but they're now all delving into the realm of time and cycles. And that's cool. I don't mind people going into that, but I do watch their videos, and I do need to tell you that you need to be careful with these guys, because they give you a lot of false information or just what they believe is fact and opinions. So there are two, obviously Jason Pazzino. He's obviously into the time element. Jason, in my opinion, is still very new to this whole time and price. Now I didn't want to call out any specific name, but you need to know just who I'm watching and just who I'm basing my opinions on. I still think Jason has a long way to go. Obviously, I'm not in his back end. I don't subscribe to his premium service yet, so I don't know what goes on in his back end. But when I watch his videos on the front end, I do know that his level of knowledge, or at least level of understanding, is still not enough to actually warrant paying for a back end service. I don't believe he's delivering his message well enough on the front end that I would want to go into the back end to understand what he knows about time and cycles, because I still think that he has a large gap. Now, there was another guy, like Crypto Crown or Crown Cave or something like that. He started talking about cycles just recently too, and one of the topics he said was that a cycle runs from a bottom to a top, and I just want him to potentially get an understanding of what cycles are, because cycles are a circle. They have a beginning and they have an end, and generally a circle ends where it began. That would mean bottom to bottom, top to top. Does that make sense? So you can't, he's effectively, and we'll go ahead and draw it in. From him saying that a cycle is bottom to top, that's like saying that a circle is only half. A cycle begins and ends at the same point, which means that you start from your bottom, you run up to your top, and you move down to your bottom. That is the complete circle or cycle. If you want to go top to top, that is also another complete circle, which is why I just want you to be careful with these guys that you're following, because they sound very intelligently, and they sound like they understand what they're actually talking about. But I'll come out and I'll call people out because I've seen it just far too many times, and I don't mind staking my reputation, because I don't really have much on YouTube on this, because I just want to lead you guys in the right direction and give you guys the right understanding of what a cycle is. Now, as another example, this decline here, a lot of people are counting this decline as the cycle low. Well, actually, and I'm not going to actually give you the cycle low, but I'm just going to tell you right now that this decline here is not the actual cycle low, and is actually not the right point to be starting from. This here is a bear market crash. That's not a cycle low. So anyone who's counting from the, about February 2014 low and counting their time, I don't think that's a cycle low. And I think anyone counting from that time period has the wrong time cycle that they're watching. That's a bit like saying you're going to start counting the time cycle from this bear market crash. The market ran down and then it sort of ran across. You got to have the right starting point and the right ending point to be classified as a cycle. So I just wanted to get that out of the way, because you need to be, if you're going to get into this realm of cycle trading, you need to understand that it's low to low, okay? It's not low to high. It's not high to low. It is low to low or high to high. That is a complete cycle. So now that I've plastered that, let's go ahead and talk about something else. Now I want to talk about, in this instance, and we're going to stick on this pattern chart for now because it's a weekly chart. We're going to talk about counting bars. Now the reason we're going to talk about counting bars is because counting bars is, in my opinion, important. Now there is a concept in trading which is called time and price over balance. And this is a topic that was talked about by W.D. Gann, and a lot of people, even myself back in the day and age, when I first started, I had no idea what a price and time over balance was. Gann would say that at market tops, watch for time and price over balances, etc., etc., etc. And he would also give examples of what happens when the market overbalances. Now, what does it mean when it overbalances? Well, pretty much if you have a market that's doing this, and it's just, trending up very nicely, and then it does this. Well, as you can see, if we're counting the uptrend in this instance, you can see that the uptrend is balanced, okay? They're really formation in their moves. They're going up in the same, price ranges, etc. It's really beautiful. So you get this sort of thing, and then you might get, this little short one up here. We want overbalances and we want underbalances in time and price to get an understanding of market formation. Now take a look at these bottoms. So this down move, this counter trend in the uptrend. They're also, very similar. They might not be the exact percentage, they might not be the exact, number of bars or whatever, but they're still very similar. They trend down and they still look like the market's quite bullish. Then you get this massive move here. This massive move definitely outdoes what's happened in the past. It's moved down a lot further than what's happened in price, and it's moved down a lot further than what's happened in the past in time. That is a time and price over balance. And that generally means that the market dynamics are changing. It doesn't mean that, we got a call for a bear market. That doesn't mean that, but it just means that the moon boys, the actual call for the continual moon is likely to become less and less until it changes. Okay, so let me draw your attention to this section here. We count bars, so we have the market moving up in this nice formation, and then we get crack. You see this crack here, where it's quite an overbalance in price, where the market was sort of moving up very slowly and then down, and then it goes up and then down again. And this time, instead of moving down 1 bar, it's now moved down 1 bar, and now it's moved down 3 bars, and then it's moved down 1, 2, 3 again. 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, and then 1, 2, 3, 4, 5. And then it starts to move up again, and it moves down once, moves down once, moves down once. 1, 2, 1, 1, 2, 3, 1, 1, 1. You could classify this as another, but that's an outside bar. The point is that this was an overbalance in time. This was an overbalance in price. This was an overbalance in time. And that generally meant that the market was favoring the downside more than it was the upside. Okay, does that kind of make sense? That is what an overbalance is when you're looking at it in a bull market. And obviously when you're looking at it in a bear market, you would do the exact reverse of that. So in this instance here, in the bear market where we had down and then we had 1, 2, 3, 1, 1, 2, 3, we started to have an overbalance in time to the upside. So instead of it running up for just 1 bar at a time, or maybe several before it cracked lower, we can see that this market's starting to trend higher longer. So at the moment, it's very evident that we have an overbalance in price and time to the downside, and that is why I need to be watching it, because I want to be making sure that if the market is not going to, do its blow off top, run into an extended cycle that everyone's talking about, etc., I need to know when am I cutting any losses, when am I cutting any gains. So that would mean any purchases that happened in this area here would be cut as a loss, and any purchases that were happening in any of these areas here would be cut in profit. Okay, so we need to know where we would be exiting, and for me it's this low here. I think that this low here, despite the potential calls for it to coming down to here again, I think this low here, if broken, would change the dynamic of this market and would give us more of a bear case than it would of a bull case. So if we go back to 2018, we have the market rounding into 2017, bear market crash, and then anyone who kept holding after this thinking that the market was going to go up was going to be left holding the bag. So we needed to watch the market dropping, or any signs of it dropping below the low that occurred, at least in that run. You could even go back and look for other lows. I've set a low that occurred on the left side of the screen instead of the right side of the screen, because I want to be catching the move out before it occurs. So if you were trying to look for a decline where we are now, pretty much, so let's just say this was very similar to the September low. the market crashed over balance in price, and then it sort of rallied higher. Once it broke below this low here, you would have been better off cutting your losses if you had any, if you bought up here, and just moving out of the market. Why would you move out of the market? Well, you could cut your losses at around 10 grand, and if you cut your losses around 10 grand instead of holding it the whole time, you would have been able to move into the market, you know, around the 3 grand, 5 grand, etc. should have you wanted to re-enter into crypto. That means you had 3 times the amount of assets in this area down here. Then if you just held it and waited for it to come back up to 10 grand to hopefully get back in at 10 grand, or at least double up at 10 grand and move on. It's about compounding your investments, and the only way to compound your investments is to keep your cash, okay? You need to keep your money, you can't lose it. So if you missed this low, which is why I wanted to use this one in this case, you would be looking for another break below a low. And in this case, you're looking around 6,500. And even if you set your stop losses at 6,500, you would have still been able to get in at a much lower price if re-entry was your ultimate goal and you were doing cycle analysis or time analysis or watching for overbalance in price and time, whatever theory you were watching to re-enter the market with the anticipation of buy and hold strategy, you would have been able to at least double your assets even if you sold here, okay? Now there is a lot of quote-unquote experts on YouTube, and I'm sure you've seen one, and I don't want to come across as one at all. I just want to give you my opinion on everything. The market fell 83.8% back then. If we go back to 2014, and I'm just going to go top to bottom in this instance. Whoop, I clicked the wrong chart. Market. If the market was going to do the same this year, which I don't think that we're going to get that kind of a fall anymore, not because of institutions, not because of whales, I don't follow that talk. I just think that everyone would be expecting a similar move to occur, and we haven't had that blow off top happen in the market. Let's say that the Bitcoin price was going to crash 90%. That would put it down to around, you know, $8,000, which would also put us back around the March 2020 lows and so forth. The only way, in my opinion, that we can get a crash of 80% is if we have a blow off top. A blow off top means a series of higher lows, higher highs into an eventual top. Then we get our bust, and then we get our bear market. Again, if we repeat that in 2013, if I go on and unlock this, a blow off top means we get a series of higher highs, higher lows into an eventual peak, and then the market crashes and it drops around 90%. Unless we get a series of higher lows and higher highs into a blow off top, which if we take a look at this move here, I moved it. The market rallied 1,200% from its March low. That is considered, I guess in one book or another, a potential blow off top. But it's not the kinds of blow off tops that everyone's been waiting for, and that's the kind of move that I would expect to see in the move, that if a market was going to make a blow off top, that it would. Now we have to be watching our Bitcoin cycles, okay? So the Bitcoin cycle was suggesting a low around this point in time here. This is a 90-day Bitcoin cycle. This is one that I found. I backtested the market a lot and found that the market moved in and out of these 90-day Bitcoin cycles, and I haven't seen any of these other cycle experts point this one out. So and I've got several other cycles actually. In this cycle finder one, I did find a ton of other cycles that I've been watching, and I'm starting to, you know, build a better case for Bitcoin and start to understand it a bit better. So because when I ever talked to people, all they said was, oh, Bitcoin has a 4-year cycle. Bitcoin has like a supply to ratio cycle. Those are not cycles. So the 4-year cycle is an inherent cycle. It doesn't guarantee that the market's going to peak and trough at certain points in time. It's just a 4-year halvening cycle. And we saw it occur twice. Twice is not enough for me to, you know, base an opinion on that the market's going to repeat indefinitely. So I wanted to go out and I wanted to find more cycles. And, you know, these bottom to top boys out there that are looking for cycles and in price and time, they're going to miss a lot of these cycles that we're finding right here. So you have the advantage of this channel that we're going to be able to find cycles that no one else is going to be able to. If we're going to use this low here as the low that came just outside our orb period, again, a lot of people don't even know what orb means. Orb is a period of time before and after a cycle expected date. That's all it is. Go study astronomy if you want to know a bit more about orbs. And that gives us a potential midpoint right here, and then a potential cycle low over here. So what this means is this whole time we've been looking for right and left translations. Okay, so I'll draw it on this one again. If the market moved up and got a right top, so in this instance a right top, let's go up, and then fell into a cycle low, which was in here. That was a cycle low. Then that told us that the market was more likely to be bullish than bearish on the next cycle. So from this cycle here, if the market hit a top on the right hand side of this midpoint, which it did, and then found a low, remember all it has to do is it has to find a low above that point. If it breaks below it, then that invalidates the cycle and changes the dynamic. So moving across, if we get a midpoint on a right translation, the low, generally speaking, is going to be higher. It can be higher at any point, it just can't break below it. Okay, that's the key there. So if we're going to be going out into the future, we need to be watching, is the top on the left or the right hand side of this midpoint, and if it's on the left or right, then we can get an understanding of where that top is going to be. So if the market from here sort of finds a left translation top by, what is that, January time, let's clear the chart. Yeah, by January, then that puts us on a higher watch that the market is likely to fall lower than its starting point into March. That's pretty much all it is. So any break below here, and I'm calling it's safer to be on the sidelines than it is to be in the market. I'm not saying that the market can't continue to go up. You know, it could go up to hit its midpoint and then crash again. It's totally acceptable. But I'm just saying it's safer to be on the sidelines than in the market. I think based on what we've seen in the past, the sidelines, you know, the sidelines doesn't mean you have to never get back in, okay? A lot of people think that, oh, once I've sold, I'm out of the market, I've, you know, wasted my time, and et cetera, et cetera, et cetera. It doesn't mean that at all. All it means is that we're taking our money out of the market and we're watching on the side for another potential better place to enter the market. That's all it is. We want to protect our capital so that we can move forward. So I'm just going to save that. All right, let's talk about time counts, because have I got a timing one? We'll do the time counts on our Bitcoin price chart. So these boxes here were considered important. We found a lot of congestion happening in these boxes here, which happened to the upside, which is not ideal. We want to see the market obviously move above into these boxes and then bounce off them. At the moment, what's happening is the market's moving up, hitting congestion in them, hitting congestion in them, hitting congestion in them, and they're falling. And we can see that with the series of lower lows and lower highs happening here. That puts us on alert for further downside potential. And with that said, the next date that I'm watching, so today is the 18th. Obviously the next date is coming up, I believe, in the next 24 to 48 hours, possibly, you know, today, tomorrow, the next day. But the major date I'm watching is going to be the 22nd to 23rd of December. And I believe that that would be a nice date if the market hit a low and not a top, that I would be a bit more, you know, a bit more safer in the market than I am feeling right now. The last turn date that we were watching was the 12th, and as you can see, the 12th actually marked a top, and I don't like it when they mark tops. The next one was the 15th that we were watching. 15th also marked a top, and the market is moving down. So the 12th marked a top, the 15th marked a top. If the market, you know, rallies higher and marks another top, I am looking for that bottom on the 22nd to 23rd. If it doesn't do that, then again we really need to be watching this low, because there's too many moon boys out there still calling for the market to move up. Because they didn't get that blow off top. You have to be safe in the market. We're moving closer also to this potential buy signal, which is when the market moves above this. So, you know, we have to take it all with a grain of salt, and we have to just see. So this is just a VIX fix and 500 period Wilder moving average. The moving average is actually this black line here. It just gives us, you know, an average of what's happened on the VIX fix. And this point in here, which is actually when it spiked right here, this point in the midpoint is a good location to be looking to buy and sell positions, depending if it's a bear or bull market. But when it gets above this, that gives us greater confirmation that any purchases that we make are going to be safer than if we make them, you know, in the green area. So we don't want to be buying when the VIX fix is in the green. That's bad. So in the green is bad, in the red is good. And that's kind of why it's been set up like that, okay? So green bad, red good. So if you were to be buying in this area over here, it would have been better to do that than it would have been to be buying, you know, when it was down in the green areas over here. Once it moved up into the orange area, it's better to be buying there than if it does when it moves into the green area. So we don't want to be buying green. Whenever it moves into the green area, we don't make any further buy signals. Okay, we look to sell, and in the red, we look to buy. So think of, you know, flip the polarities. Red is buy, green is sell. Obviously, you get this information late, so I encourage you not to follow it at all. but I'm just giving you an idea on, if you watch this video, you know, look at what you could have done in the past. Okay, so we are definitely trending higher, and if we get a break, you know, anywhere to low, to these lows, we could definitely be, you know, up into this area again. But we just need to, yeah, we need to be very cautious right now. I'm actually very cautious right now, and I'm really getting ready to sit on the sidelines. A lot of people, you know, are even looking for it to come down to the September low. You know, into this box again would be okay. But we just need to be watching, you know, any major crack below this, and we need to be considering our options. Any low that occurs in here, we need to be watching heavily. Anything that drops below this area, you know, I think the market sentiment has possibly changed, and we could have actually seen our market top here. So again, if you haven't already gotten into our group, we go through these forecasts and we go through what the market could look like into 2022 and beyond. Everyone who's just already subscribed to the Bitcoin forecast has just been upgraded to include the Dow Jones, the Aussie XJO, so that's the Aussie All Ordinaries, and also we've also got a forecast on the gold cycle. Now, what I uncovered for the gold cycle is actually probably one of the best forecasts that I've unlocked so far. I think that we've hit the nail on the head with our gold forecast, so we're going to actually be able to see tops and bottoms, at least until we get polarity flips in the market, tops and bottoms in gold that I don't think I've seen anyone produce before. I think that we definitely uncovered something extremely valuable for that market. So if you're into gold, if you're into that, you know, safe money alternative assets, so if you jump between gold and Bitcoin, or monies, cash and Bitcoin, etc., and then want to look to allocate that profit into gold, you know, everyone's different. Everyone's got a different, you know, vibe. Definitely, you need to jump into that group. The group is in the top link in the bio of this video, and also I've left it as a comment down below. So that's a yearly subscription at, what does it cost? Like $50-$70 a month, depending on where you locate it. And we go through and we talk about everything that's playing out in the markets. I've also given some great clues into what could actually occur, not only in the financial markets, but also politically speaking next year. We're taking a look at several events that may occur in the world. And I actually go through and I show you the basis of methodology that we use to forecast. So that way you can go ahead and start learning how to forecast. So if you're already in the Bitcoin group, go ahead and log back into your platform, because you're going to see right now that you've been upgraded to include all the other forecasts for the other markets. And if you're not in it and you want to join us, then that is where you go. You go to those links below, you join, and you see us in there. So again, I show you many times what could occur in the markets using my hypothesis and my opinions based on the market. You know, if you go back and watch all the videos, you'll see that in this area here, I suggested that the bull case is still possibly on, and I suggested definitely in this area up here that we need to be, you know, changing our tune, because there's potential that the market is more bearish than it is bullish. When we get into a new area, I'll give you my new case. At the moment, I'm feeling that it's safer to be on the sidelines, but I'll give you my new case once we get more clarity around this area here on if we should be bullish or bearish. At the moment, we are watching, what is it, around the next 24 hours for a potential turn date, 24 to 48 hours. And then the major turn date I'm watching for the remainder of this year is definitely going to be, you know, that next Wednesday, next Thursday, depending on your time zone. Next Wednesday to next Thursday. Okay, so that gives us 1, 2, 3, 4 to 5 days away that we need to be watching to see if this market's going higher or lower, and then you need to decide what action you want to take. Anyway, that's it. That's all I have. I will talk to you in about a week.